What is going on, everybody, and welcome back to the Clear Cryptos Education Channel. My name is T.Hobbs from the Crypto Shop. Down below, I got my man Justin Seals, and I got my man Zach Thomas in the building. How you guys doing?
What's up?
You're doing well, doing well.
Good. Yeah. Hey, today we decided to jump in here real quick and have a little bit of a dialogue on everything that's been going on. We do our best on the Clear Cryptos channel to give you the breaking news, give you educational topics, and at the same time, just give you our perspective on how we see everything. Now, the biggest topic on the day absolutely has to be CPI, right? CPI on the day, 8.5% after an expected 8.7%. We have the actual numbers. We'll be going through that. We're going to give you our perspective on exactly what we think about the market's reaction to the CPI data. Don't forget to like and subscribe to the channel. Go back and rewatch this if you need to. But if you're here for the live, welcome, and we appreciate all of you for stopping by. So we'll start from the bottom and work our way back up to me. Zach, what are your thoughts on this market, man? What's going on?
Yeah, well, I'm definitely glad to hear that it's lower than what we expected, especially, this is we started out the last time with not the best news either, where we were at 9.1 last time around. So we're headed in the right direction where it's getting lower. I'd love to see that. I still think, though, that the middle class is getting squeezed a lot. When we take a look at everything, energy, food, these items are up quite a bit, much more than 8.5%. And these are the things that the average people feel very much. Energy is still 33%. That's tremendous. Gas, that's great that it's gone down a little bit, but we're still at record highs, just not as high as we were a few weeks ago. Mm-hmm. So I'm hoping that we're headed in the right direction, but this grind down where if we have a continual 8% all the time for months and months and months, this is still a big problem. So there's work to be done, but I'm glad that we're finally at least have kind of turned the wheel in the right direction.
Awesome. Yeah, I mean, I'd have to say that, even though we're at, higher levels, you're right, that 8.5%, I'd have to say, looking at this report, man, there are like some very interesting numbers, and we'll get into all that. But Justin, what are your thoughts, brother?
I told you so. I told you so. I told you so. I'm taking my victory lap around the track because I've been told y'all that CPI numbers was going to come in much lower than what they did. But something that was interesting and something that I thought was more important to watch was core CPI, right? So core CPI are the numbers without energy and food. And those were expected to be higher, and they actually came out the same as last month, which means inflation, in my opinion, as of right now, has peaked because we knew that energy was going to come down, which was going to drive CPI down as a whole. But it was important to see what core CPI was because, energy comes down, right? But just because energy comes down, you don't want everything else to continue going up. You want to see core CPI either stabilizing or coming down. So because we stabilized, hopefully core CPI next time, we'll see it come down. CPI will continue to come down, and we'll keep seeing bullish runs in the market like we have today.
Absolutely. And, speaking on that as well, like for me, in the beginning, when you said, we had reached the peak, I was like, I mean, we could go a little higher, right? Like that was the conversation we were having over at the shop. But, when you start to look at it, right, you just go out your front door and, walk down the street or drive down the street to your nearest gas station. You feel it at the pump, right? I know here in Kansas, we're down almost $1 since the last, over the last month in gas prices. Gas prices when I first got here were up to like 440, 445. Now they're at 339. So one of the biggest weighted indicators in the CPI is going to be fuel, energy, and food, right? Like those are the big ones. So when you get big price gouges coming down at that level, like you expect to see it in the CPI report. And I believe that we got that today. The expected CPI report was 8.7. We ended up seeing a 8.5%, which I think it's kind of surprised the markets, but in a good way. And the markets reacted accordingly. And we'll go over that here in a second. But let's get into some of these CPI numbers, like just getting to the numbers. Like this is no opinion. These are the facts, right? So we look over here at food, which is what to Zach's point, right? food at home is actually up, right? 1.1, 1.3. And then you look over here, there's actually no change. But for the most part, middle class people, to Zach's point, is actually up, right? We look over here to one of the bigger indicators, which is energy. And overall, we're down negative 4.6%, which is where we want to be. But this is the big boy right here. Fuel and oil is down a whopping 11 points from being down 1.2 the last quarter and obviously being up 16.9, which is where we felt the majority of that pain at the pump. So what are you guys' thoughts on, just looking at the numbers, taking the opinion out of it, just kind of looking at the numbers and how they relate to you?
I think that we measure the numbers in one way, and we should also be measuring the numbers in a second way. So this is great. Mm-hmm. This means that it went down. Well, it went down from month to month, but it hasn't gone down. It's just not going up
right?
as much. Yep. It's kind of like if Hobbs, if I sold you an apple a year ago and that apple is $1, and then all of a sudden that apple is $1.50, and you're like, hey man, what happened? I'm like, sorry dude, the apples are expensive right now. Mm-hmm. And then you come back again and the apple's $1.55. It didn't get less expensive. It's still getting more expensive. So my thoughts on this are, we're not out of the woods yet, but if we have reached the peak and the price inflation is slowing, and we got there, if you're right on so far so good. Right. So while we're headed in that right direction, maybe we've hit that peak. The prices are still going up. And if we look at these things really since the pandemic, it's way more expensive to take my family out to eat now, even if you just go to a cheaper restaurant, than it was right before the pandemic hit. Yep. And, I think that a lot of low income earners and the middle class, like those people feel that. I don't think that NASDAQ, I don't think that politicians, and I don't think that the rich really feel a lot of these things. If you're the guy that's making $150K a year, you probably don't feel that extra $50 in your gas tank every 10 days or whatever you end up doing. But if you're the person that's commuting, that's got to work those 2 jobs, that you're door dashing, you really feel that squeeze at the pump a lot. And that's not the only thing. So this is good news. This is great for the market because we've kind of hit that top. But the way that I think that this is going to come down from the top in the government is like, hey, things are actually cheaper. And well, no, they're not. They're just not going up as much. And that's great. So no, how about you, Justin?
I agree with you. I think like the government will take its celebration too from the numbers. And also, the family thing, it being more expensive and everything. But I think when we look at the market doesn't really care about other people, right? Like investors don't care about other people. They just care about the straight up numbers. They see negative 1.2 and then they see negative 11 and they're like, holy cow. Yep. It's game time. We about to eat. And we saw that in pre-market. As soon as, actually, I got it up over here. I'm going to look away from you guys for a second. But as soon as the numbers came out, we had a $57 candle on the futures for SPY, or the futures, which is basically SPY, but a different indice if you guys have never heard of it. But that's insane. Like you don't see those numbers in 15 minutes unless something great happened, right? And this is something great for the market. I don't want to say that we're in a bull market just yet because we still have to wait on the Fed and see what they do, because they can go back and say, okay, well, 0.75 is still a factor. Another thing that you also didn't mention too is that energy and food are 2 things the Fed doesn't control, right? Those are the 2 things that the Fed cannot do anything about. That is on the businesses, the farmers, and the oil companies. Everything else they can slow down. They can slow down the jobs. They can slow down, the rest of our economy. But they can't touch fuel. So for me, this is a win for the Fed without them having to do anything at all, right? So maybe this leads more credence to them not having to raise rates so quickly, them going back to a 0.25, and us starting to really get into a bull market. So that's kind of where I'm at.
Yeah, I pretty much agree with both of you. I feel like the numbers month over month, it tells a story, right? Now, to Zach's point, 22.3, right? This 3-month period right here was absolutely drastic, right? Like this was 30 points, 40 points, difference. So when you come over here and we add another 16 points and then we only lose 11 points in July, it's not telling me that July is cheaper than than March. However, it's, to Justin's point, it starts to tell a story, because if we were at our peak, let's say back in June, when we got that 9.1%, the next thing you want to start to see, to lay credence to that point, is you want to start to see negative decrease, right? You're not going to see a 22 point, 30 point, 40 point drop in 1 month. But as inflation, as CPI data starts to come out even more month over month, is very important for us to pay attention to, because the Fed is going to make their decision based off this CPI data, right? They're going to make that decision. That being said, the next catalyst that we're going to be, discussing is that FOMC meeting. Like, what do you guys think the Fed, how do you think the Fed is absorbing this information? I know we had a Fed talk earlier today. I missed it. I was in another meeting, but what do you guys think that the Fed is going to be doing, moving forward? So Justin, you go first.
I don't know. It's tough. Like I said, they're going to take their victory lap. They're going to be popping bottles, drinking champagne, going crazy wherever they party at. But it's a hard read for me. Like, I don't think that they're done raising rates. I mean, they've already said that. I don't think they can be done, right? Because we're still at 8.5%, and their goal is what, 2%, I believe?
Yeah, 2%.
So for that to happen, they're gonna have to continue raising rates. It's just how quickly do they want to do it, right? And one problem that we have right now is that we're still in a recession and job growth is going crazy. Mm-hmm. And the whole point of the Fed is to slow down the economy so that we can get this inflation under control. And they can't do that if the job market's going crazy. So in essence, we're not in a recession, but the Fed's job is to get us into a recession, right? But they don't want to get us into a recession. So it's like, how do you balance that, And I don't know. I think that they will taper off so heavy on the Fed rate hikes. Like, I don't think we're going to see another 1 basis point. We might not even see another 75 basis point right now based off of this data. But yeah, it's just going to be really interesting to see how they balance, like, keeping us out of a quote unquote real recession, but like also pushing us closer to a quote unquote real recession. So I don't know.
And then Zach, before you go, let me say shout out to BK2. Shout out to my man Malik. Malik, we definitely told you we were going live, but it's okay, man. I still love you. Thank you for stopping by. Boca in the building. What's going on, Boca? We got Zach Humphreys in the building. Said, what's up, guys? What's going on, Zach? Four is in the building. Said, what's up, y'all? What's going on, Four? And then Justin Elcat says, hey, what's going on, Justin? So your thoughts, Zach. What do you think the market or the FOMC meeting is going to bring for us? Like, where do you think the Fed's head is right now after getting this newest report?
Yeah, so on the market piece of that, in the short term, definitely I think we're going to get a little bit of a pump in the market. Us crypto guys, we're pretty aware of these things. The most crypto investors, I feel like, are pretty savvy about watching this sort of a thing and understand that the economy wasn't probably in the best spot even a year ago and knew that a lot of this was coming. So I think a lot of people are really prepared for that. A lot of the traditional investors as well. The Feds, as far as what they're going to do, I mean, that's the $1 million question, right?
right.
That's what everybody's kind of.
Everybody's kind of waiting on the Fed, like, okay, you got the numbers. What you going to do now, right?
I don't think, speculation, of course. I don't think we're going to see, because of this, another 75-point rate hike. I could see them. They're probably going to taper that down somewhere. I mean, they maybe 5 point, I don't know, 50 points perhaps, but I could also see them going, hey, we just went up and up. They've said they're going to go up. They've got to go up a little bit more, but they could also say, hey, we just gave you a couple of hefty increases. We're going to slow this one down because this is good information that we have out now. Things are looking better. I could see them making that judgment call too, but then maybe the next time around they're like, waha, here we go. We said we were going to do it and they just hit us twice as much the next time. Who knows?
So for me, I think, you guys like to dance. Justin likes to dance. I'm gonna just come out and say it. I think we come back with another 0.75, and here's why. I think that 0.75 gets us closer to our ultimate goal toward the end of the year. And then after 0.75, I think the Fed will feel safe enough, especially if the next CPI report is starting to come down even further. I think the Fed will feel safe enough to continue or start to taper down. So that would be 3 consecutive 0.75 hikes, right? Then the last 2 could probably go down to 0.25 or 0.5 at the highest, I think, right? And then we start to see those nice big chunks coming out of CPI. As that happens, the markets will then feel free to kind of continue to rise, because as that inflation number goes down, the markets are going to continue to react to it. So that's kind of my thoughts on it. We can move on and talk about the charts, man.
Well, before we talk about the chart, Zach brought up a really good point. I was just thinking about it. When do you think that crypto investors really started paying close attention to the Fed and CPI and economic news as a whole? Because crypto's relatively new, and it hasn't been as tied to the stock market until recently, back, I would say 2020, 2021, when Bitcoin really had its rise and started to get connected to the rest of tech. So, I mean, in my opinion, I think most crypto investors are relatively new up on this part of, watching the market. And then on top of that, new investors coming in have the fortunate ability now to see what influencers are talking about now, to be able to get up on these things faster, and it helps out crypto as a whole.
Well, I guess to answer your question as to when, I think investors in general, whatever asset they're investing in, I think there's a certain percentage of investors that just kind of go with how they feel, right? They buy on red candles, they sell on green candles, or vice versa. But then I think the majority of savvy investors know how important macroeconomics as a whole is. And I think people have probably been paying attention, just may not have been so vocal about it until after the pandemic, right? Once the pandemic happened, everything kind of shut down, and then the market started going crazy. So everybody became a professional investor, because you could literally take a dart, close your eyes, and throw it backwards and hit a bullseye in regards to making a good decision on a play. Now, I think with what Clear Cryptos is doing, bringing that educational aspect and allowing people to understand that there's more to trading, more to investing than just pick this stock, pick this crypto, and it's going to go up. Now you have to make savvy decisions. So when, I don't really have the answer as to when, but I know now more people do. So that would be my response to that. What about you, Zach? He's like, dang, that's a good one. Zach is like,
Well, I think that there's a few more variables that we need to throw into the equation here.
Okay.
We spoke about jobs and there being more jobs, but a lot of people are really working 2 jobs. They're working multiple jobs. They're not getting those really good career type jobs with the benefits and everything that they need. And so somehow we're going to have to address all of this moving forward, or we're just going to have to somehow change the way. And I think that we are changing the way that we even interface, as far as the way that we conduct a lot of transactions, not just with crypto, but I mean, society, how we're kind of moving things and people about with jobs in the jobs market. So, as I'm kind of chewing over this, looking at some of these numbers and talking to you guys, there's a few things that I've been kind of thinking the last couple of years. One, and I think that Elon Musk said this very well, probably on Joe Rogan, was you can't send all of the people home that make all of the stuff and expect there to be stuff. And then we had some of those supply chain issues. And there's things where the housing market in the U.S. has definitely cooled down. It hasn't crashed. It hasn't slowed. I don't think that it's going to crash. But it definitely seems like we were due for a slowing of the housing market. And I actually think
correction. I think there'll be a correction, not necessarily a crash, but yeah, go ahead.
Yeah, or even maybe like it slowly grinds out like crypto did from, November until we had the whole Luna thing kind of happen in May, and then it really crashed. But for those 6 months, we just had a slow grind down on some of these things. So housing could be that way, which I kind of think might be a good thing for the younger generation and the economy in the long run, but obviously that's going to be a hard thing in the short run. In kind of looking at these month-to-month numbers, though, if we're able to if energy continues to fall month after month, if we have some of those, I guess, grind down in those prices too, I think that we could really offset some of this, and our recession that we're having right now isn't actually going to be that terrible. Barring anything internationally happening, it would appear that China they've overbuilt some of their infrastructure, and they're having a hard time with some of that the last couple of years. So these could also be some variables that we throw in here. But as far as the markets and the Feds, I do think that we're going to see a little bit in the short term, definitely a bump, probably at least through today, maybe. And I just think we need to really keep an eye on all of these things here and just really, really pay attention, because it is an unprecedented time in history, and crypto is so brand new, and we haven't really been able to tie it into all of this consumer price index data for very long. So this is just something where we need to pay a lot of attention, and we need to really make sure that we're understanding and taking as much information in and learning right now about what's going on so that we can keep applying it.
Yeah. To your point, I mean, what I think I'm hearing you saying, Zach, is inflation is transitory.
Well, I think that as we experience, this is one of the things that I love about crypto so much. I see crypto as a way where we have this big inflation bubble. We can inflate that bubble, or at least support that bubble, with crypto and allowing this to flow really into the hands of everybody. That's my belief. And so my belief, and this is kind of a separate conversation, but when we get crypto into the hands of more people, some of this inflation just isn't going to matter as much, because we've kind of held it up and we've propped it up with another asset class for the next generation. So I'm not terribly worried. For right now, I think that we're headed in a good direction, but we just have to navigate some things and pay real close attention to make sure that there aren't any bad slip-ups.
Yeah, I mean, and then we got a question down here. Silly Willie said, "Let's get it." What's going on, Silly Willie? Love saying that name. And then thoughts on China's current influence on the global market. You guys got any thoughts on that?
I mean, China, for the most part, they kind of have an influence, right, on like goods coming in and stuff. Different sectors in the market, they have a huge influence on, like anything that has to do with chip making, which we just passed a bill which should hopefully lessen that influence. But you kind of have to look at what we get from China from a supply chain issue, and then put it to the sector of what that affects. So do they affect the whole market? And not as much as you might think, but they do affect certain sectors in the market, and some of those sectors are bigger sectors, right? So that's kind of how I look at different influence by countries. But I don't think that they influence it so much that it's like, China's going to tank the market because, they stop importing us goods, right? We'll figure out another way to get what we need. So,
yeah, I mean, exactly. I mean, China's the second largest, economy or whatever, but like their exports don't make up a lot of, like in regards to the global market, right? So in regards to the global markets, China's exports are like a drop in the bucket, honestly. Like if you really look at the math and you look at, how things are broken up, China's global market, it's one of the largest, and they make up a nice percentage of that global GDP. But their exports, which is what we would pay attention to, their goods and services, they don't really, I don't even think they make like the 1% or 2% of what they actually issue out. So in the grand scheme of things, it's more, just to bring it back to a crypto conversation, China's influence on our market in the US is not really that strong in regards to what we're doing in the crypto space. To Zach's point, once crypto kind of diverges from the stock market, this really won't even matter. Like these charts, this S&P 500 won't really matter. And that's like the ultimate goal. You see this morning, S&P 500 is up, crypto is up, but the dollar is down. That's kind of what you want to see, right? You want to see that reverse correlation And eventually you want to see that divergence from the S&P 500 of Ethereum and Bitcoin. So yeah, in the grand scheme of things, China matters, but not really globally, right? So your thoughts, Zach?
I might take a little bit of a disagreement with you on that one.
That's fine.
And
take a look at the numbers, man. I'm a numbers guy. So.
Well, yeah. Well, here in the U.S., look, we've got elections in 2 months.
Yep.
The White House isn't going to allow or push out any narrative for anything over the next couple months that's going to undermine as many of those seats. They need to hold on to that. That's what they're trying to do. So and if the market just tanks right before the election, they're in some big trouble.
Absolutely.
So I think that they're going to really work on just kind of stabilizing this and kind of floating it for a while.
Mm-hmm.
But let me ask you this, Hobbs.
Yeah.
I don't know China's situation super well, and I understand about the exports and things, but there's more than imports and exports.
Absolutely.
We do have to probably take into consideration right now, I think, Taiwan, or maybe perhaps if there is that much of an infrastructure overdevelopment, and a lot of these investors are about ready to lose a lot in China. Yeah, that is a lot of investment dollars coming, into the U.S. in all sorts of different businesses and things too, not just imports or exports. Mm-hmm. But, here in the U.S., I do think that we're going to be good to go here, probably treading a lot of water for the next couple of months until we get through the elections and towards the holidays, the end of the year. People once again spending more money on Christmas, everything else. We'll see how that translates with the retail investors into the market. Typically, they're not as big of an influence on the market as they used to be already, and that seems to be dwindling as financial institutions are really pumping a lot of it. I don't know. What do you think, Justin?
I already gave my answer about the markets. They don't control them that much at all, in my opinion. I think that we have enough global influence that whatever China decides to do, we can.
They matter, but they don't matter, right? Yeah, that's just kind of where I'm at with it. Like, yes, I do understand the real estate situation over there. I get it. Yeah, there's billions of dollars at stake, and China markets matter, but U.S. is a global force, right? Like, and I'm not trying to compare the two countries, right? And I don't mean any offense to anybody that thinks that. I'm just looking at the numbers, right? I look at what percentage they make up of that GDP, and you're correct. There's more to the GDP than import and exports, but what part of the GDP do we really focus on? It's going to be the imports and exports, right? Yeah. So when you're looking at the global markets, when China doesn't even make up 1% of that import export, I mean, they matter, but they don't. I mean, I shouldn't say they don't really matter. It's just not as big of an issue as you would think. When people hear China, they think, "Oh, we get everything from China." It's like, yeah, but just look at the numbers for a second. Let's just focus on the numbers. So, but yeah, let's moving forward. What did you guys think about, or I should say, what did you think about? How long do you think this juice is going to last? I know, Zach, you had mentioned we got the election coming up, which I think is a big thing. But when we're talking about the S&P 500 and we're talking about the S&P 500, Ethereum, and Bitcoin. Obviously, we can talk about the S&P 500, but people want to hear about crypto. So this morning, we broke a pretty critical level, in my opinion, that we've been tracking in the crypto shop over 1726. Right, it was a level that we were watching, and we broke it pretty good this morning with a lot of value. Now, I guess my question for you guys is, where do you see us going from here from a technical analysis standpoint, knowing the fundamental analysis upcoming? And when I say fundamental, I'm talking about the macros as well as the crypto catalysts that are upcoming.
Okay. So for ETH, we know September 19th, huge date for Ethereum, right? Mm-hmm. Like big day.
Potentially, allegedly.
It's online, yeah.
Allegedly, this day has been coming for 2 years. So let's just.
But look, if it happens and Vitalik delivers, Ethereum is gonna go absolutely bananas. On top of that, I mean, there's not much economic thing stopping Ethereum or Bitcoin from going crazy as much as, you know, the SPY or anything else in the market. We've got we've got CPI in August.
Yep.
And then we have, for August, we have CPI for September. FOMC should be coming back in September. And then, you know, those two are, you know, definitely days to watch. But even those two, I think as long as CPI comes good, traders or investors can pretty much expect the Fed to do whatever they say that they're going to do and keep their word to it. So the market will already know that that's going to happen, right? So I don't think we have too many more roadblocks. I think Zach, you brought up a good point with retail spending coming up into the later months because of all the holidays. So more spending is normally good for economics. So that's a good thing to remember. But yeah, I mean, I wouldn't be surprised if this run continues. Maybe not as strong. Like, I don't think that. I still think that people still remember when crypto was going nuts, and they expect these huge movements. But what you have to remember is these small movements are actually, in my opinion, much better, right? Because we're creating these levels of support and these levels of resistance for later on down the road that can potentially hold price up later on. If we just go straight up and down, yeah, it's great in the short term, but in the long term, when we come back down there, we're breaking through these levels very, very, very quickly. So it's a much more natural growth this time around that I'd rather see growing slowly and then holding over long periods of time than going absolutely ballistic, but having this volatile asset that nobody really wants to get into because one day it's up $2,000 and then the next day it's down 5K and you're like, what just happened to all my money?
Exactly.
Right?
Exactly.
So this is much more natural growth that you want to see. And as we continue to grow slowly, you'll see more big investors start to come in because they trust the asset more. And that's what you want.
Yeah, absolutely. What are your thoughts there, Zach?
Totally, yeah. I like the slow growth better than the immediate to the moon. Much better myself, too. So I don't believe over the next 6 months we're going to have a strong, just, you know, like the 2020, early 2021s. I don't think we're going to go gangbusters like that in a year. Not yet. I think we need to get through the elections. As far as Ethereum's concerned, yeah, I do think that that's going to go bananas once it released, once it works. But another thing we want to consider too is there's a lot of ETH too that's locked up right now, and that has been locked up for a long time.
Yeah.
And so after they do that ETH unlocks, there are going to be a lot of people that immediately sell. So I think that we're going to see, you know, obviously that's bullish news, and we're going to see, you know, the retail investors start buying. But I think that a lot of these institutional investors have already been buying, and they've been sacking that E2, and they're going to watch the top of that, and they're going to sell at the top. And at that point, we're going to have to kind of level ourselves back out again.
Yeah. So, go ahead.
Oh, yeah. Well, you know, just I guess going back to what I really want to be watching this holiday season too is how, because the S&P, again, with the holiday season, we track that consumer spending. But how does that consumer spending in the holiday season really transfer over to crypto, especially as it grows across the retail investor side? If the average family, you know, say they save $1,000 a month, maybe they invest half of that in crypto, but at Christmas time they were only able to save $500. Does that come from crypto, or does that come from their savings account? Where do those people kind of retool some of that money that they're usually spending at that season? That's what I'm going to really be waiting to see. But over the course of the next year, I do think that we're going to kind of level out. We're going to have some ups and downs, and we're going to have some really big individual success stories. But I really hope that we're done just watching some of these big ones fail.
Yeah, exactly. And then shout out to Zach. What's going on, Muzz? What's going on, John? I appreciate you guys stopping by. What's going on, Scott? And then Zach says ETH is driving the market right now, back to 20% dominant to Bitcoin's 40%. And you know, that was going to be my next point was, now as we watch the market kind of flip right before our eyes, in my opinion, I think that's what's happening. I think Justin's been talking about it for months now, talking about, you know, how much stronger the Ethereum chart looks, even when it falls or even when it starts to go back up. The Ethereum chart has just been showing much more strength. Now, the dominance tracker that Zach looks up, he looks at that thing every day, and you can slowly start to see that Ethereum dominance start to kind of break into the Bitcoin dominance. Now, my question for you guys is, if we see Ethereum becoming more and more dominant, do you think if Ethereum flips Bitcoin, do you think at some point Ethereum becomes the leader? And if so, does Bitcoin then start to follow Ethereum, kind of how we watch Bitcoin follow Ethereum right now, or the Ethereum follow Bitcoin right now?
I think Ethereum is already leading Bitcoin currently, first off, completely. I mean, I think Ethereum just has the use case that Bitcoin doesn't. And with all with the popularity of altcoins and DeFi, I think if that becomes the new thing, like really the new thing, where like, you know, media right now, they cover Bitcoin. They sometimes cover Ethereum a little bit, but Bitcoin's like the big dog, right? But I think the media flip, if Ethereum becomes a thing that everybody's looking at and Bitcoin is no longer the thing because there's so much use case in Ethereum, I think that's when you really get the true the true flip. You know, the chart, in my opinion, has already flipped. But I think more people need to see Ethereum for what it is, which is the use case of all these coins being attached to Ethereum. And then from there, Ethereum, and two, I think once Ethereum's gas prices get lowered, if that can happen, then I think you'll see Ethereum definitely be more in the limelight than Bitcoin.
Yeah. And then, Zach, to your point, before you answer that, do we know for sure that everybody's going to be able to sell, or are those tokens going to be vested? So I was reading a story somewhere. I can't remember where I saw it, but I saw a story saying that, you know, all of that ETH won't be able to be sold right away. I'm just curious. Because that's a game changer, right?
I would have to. I would have to.
Yeah, I got to do a little bit more research.
How long could they really lock it all up for? I mean, some exchanges could forever. It might just be on an exchange to exchange basis, perhaps. That's something we should actually be looking up, for sure. But once that day comes, I mean, if you've had your ETH locked up for a year and a half, and all of a sudden you get a note that says, "Oh, it's worth this much more now." Yeah. I mean, there's going to be a lot of people that are going to be. No matter what that date is.
You know, it's going to be that eight coin effect all over again, right?
Yeah, but to your point, Justin, I think that if they can get the gas fees down, and as ETH becomes really just mainstream adopted, that's going to be the thing, because ETH's going to be what brings in all the retail people and just the average everyday person. And when they're buying ETH at scale, it could become number one, but that doesn't mean that Bitcoin's going away. I still think one day, whenever that day is, I mean, it's going to be worth 100K eventually. Yeah. It's going to get there. I just think that it's going to be, you know, really kind of probably what we've been talking about all along, more of the store of value, where Ethereum is just more of the use case to kind of do everything you need to be doing.
You know, how I kind of like always like use the analogy of like the $100 bill versus, you know, 20s, 5s, and 10s, right? It's like if I got a bunch of I got a $100 bill and I got a bunch of other change bills, I'm going to be more inclined, you know, to use that change in my pocket versus breaking that $100 bill. Looking at Ethereum as the change in your pocket and using the $100 bill analogy as Bitcoin, right? Bitcoin is going to remain that store of value. Nobody's going to take that away from Bitcoin, because it's just one of those things where it's a rarity. Only a certain amount of people are going to be ever able to hold it, and that's just going to continue to raise the value the more that it starts to get more buying pressure. But as far as dominance, I do agree with you guys in the panel. I think that Ethereum's going to dominate the market because it has much more everyday use case. And if Ethereum 2.0 comes out and it fixes the gas fees problem, look out. Like really, really look out, because that's going to be an absolute game changer for the entire space. So shout out to Zach. He says ETH still way behind on the Google Trends data. to your point, Justin, but more transactions on ETH already. Yeah. I mean, it's just going to be more. Nobody's trying to break that $100 bill, you know? And then Scott Hoffman says, has anyone made a comprehensive list of all the pro-crypto politicians and lobbyists to reference come voting day? I mean, I'm not a big
the handy notepad guy. Right here. Right? That's that's something that I think that would be a totally different conversation that I'd like to have. But that perhaps that needs to be a conversation between the crypto people and the politicians. At some point, there's going to be people voting that way. There's going to be single line issued voters, as there's always been, and crypto, whether or not you allow it, is going to be something that people are going to be looking at. I think, especially the younger voters. I mean, to Zach's point, it's a good idea, but also to Justin's point, says I'd be careful on that. One, a lot of them just want to ride the wave to get votes, and what if we get them in there? But I mean that's politics in general, right? You get them in there, 9 of them you vote for, I mean, out of the 10 you vote for, maybe one of that 10 may actually want to do something for crypto, but 9 out of 10 of them just be like, oh, crypto can get us votes, but that's politics, that's just how it is. You hope for the best and you vote for probably the worst. So it is what it is.
Right.
It just ends up being that way. But yeah, man. So so we talked about Ethereum, we talked about Bitcoin. Do you guys even want to make any more points before we get ready to close here on CPI?
Not really. I mean, it was a damn good report. Very happy with today's action so far. Wish for a little bit more follow through on the day, but whatever. What can you expect sometimes? But,
I mean, when the market pumps 2% before we even open, it's only a couple ways you can go, right?
Another 2% would be great. We'll let bygones be bygones. Market, it's okay. I still love you.
That's his bitter trading voice right there. If you haven't realized it yet, Zach.
It's whatever.
But yeah, Zach, what are your thoughts? Closing.
Well, I suppose in summary for me, definitely I'm happy that the numbers are better and not worse than they were before. But the reality is that this isn't a month-to-month thing, so I'm not jumping for joy right now. It's not like 8.5% is great news. I mean, it's actually still pretty bad in the relevance of things. But as far as the market's concerned today, we're going well. I think that hopefully that does mean we reach the top of the inflation and we can kind of taper down a little bit. As long as we're able to continually taper down over the next few months, I think that we're going to be doing all right. We're going to be in good shape.
Yeah, I mean, I echo both of your sentiments. I just, I look forward to the next catalyst, right? Once we get some of these catalysts out of the way, I'm already looking forward to the next couple, right? I'm looking forward to CPI in September, looking forward to the FOMC meeting in September, and I'm definitely looking forward to ETH 2.0, hopefully finally freaking dropping in September. Those things all put together, I think that we will continue to see this lower drop on CPI and hopefully see a bullish market, because let's be honest, everybody loves a bull market, right? Like nobody cares about the bear market. We care because we can make good deals, but bull markets are fun. They just are, right?
Yeah.
But all that being said, guys, I think we've come to a close. We've been on for about 43 minutes. I really appreciate all of you guys that decided to stop by. Please don't forget to hit the like and subscribe button. Make sure you get into the Discord of Clear Crypto so you can know and be notified when we come on and drop content like this. But from the Clear Cryptos channel, my name is T.Hobbs. That guy down there is Justin Seals. And my man below is Mr. Zach Thomas. I'll catch you guys on the next one, man. Peace.
See ya.